So how do we trade Forex for income? Well, we do it by hedging. Hedging is just another way of controlling risk. People think mostly stop losses are the be-all and end-all, and they're absolutely not. If you watch this video the whole way through, you will unlock the secrets to removing the stop loss, keeping your sizes very small, having complete control over your portfolio and the assets you're trading, so you can come out at the end of it in net gains every single time. If you don't believe me, like I said, watch the whole thing, or just go and watch all the other videos I've posted routinely showing the same thing. No matter where the markets go, we're ending out on top. Now, this is a skill anyone could learn, and like I said, if you study this the full way, then you can get that too. Let's jump into it. So day trading via a hedge approach rather than a stop loss is quite simple. To be honest, the management I would actually say is a lot easier because you don't need to define all those areas where you're going to put your stop loss, etc. The only real thing you might need to consider is your take profit, but in many cases, we close out manually depending on the market dynamics at the time. Essentially how sentiment is evolving and how price action is evolving, because a trade can be valid and then become invalid if it takes sort of too long and other aspects. But we'll roll on with this. Make sure you watch this video the whole way through if you're keen to learn how to trade profitably. And don't forget, you can go underneath this video for my free training and newsletter where I send a lot of helpful things out. So the yen, the dollar yen particularly, I've loaded it up about 2016, I think, and you can see you've had a mammoth fall. So I would look to add something reasonable. For me, I probably wouldn't add until you get a bit lower, and I'd be looking towards this kind of area because that's really where you've got the nearest sort of key price action. Okay, you've got the nearest meaningful market movement, which is that support and that one. Okay, so you can see with that wick, there's obviously something going on, and you can see the 200 MA is creeping up. So I can place a bid there at what will be a maximum size of 1 standard. Okay, still being conservative, and we will look to enter that about 105.75, I would say. So that's going to be 105.750, and we'll save that. So there's the buy limit, and I will fast forward this quicker so we can just roll through some price movements quickly. So viewing this on the weekly, because the market has been smashed recently, so we're looking at historic price action levels. Now, we didn't get anything pull through there to the downside. We've got a bit now, which I am now long on, okay? And this initial push is taking us to some very early levels, about 107.8. So you've got a little bit of movement there, and for that reason, I'm going to close that one. So out for gains on trade 1. I'm now going to play it forward a bit more. Now, I'd like to short if we can get about 110.355 because our nearest 20 MA is curling over, and you've got some reasonable levels of resistance about there. So I can place another order, but this time it's not going to be as big as the other one. The other one was larger because you had a good chance you'd have a significant retracement off the low because you'd fallen so far. Okay. And now really I'm looking for a new entry, but it's going to have to be considerably lighter because the market hasn't really rallied away. So this may get near our 20 MA before it eventually drops. Okay, so I'm in there, and I'd probably kill that one at the lows if we can fall back to those lows. Okay, which we have now, so I'll kill that one off. So a decent short there. And now what I'll do is I will add another one, okay, about a third size. And I'm really just going to look to trade this range now. Okay, so I'm looking for a move back to 110.48 or somewhere like that. Okay, so I'll delete that and we'll go like this. So this is a lot more frequent. In many cases, you might take trades in the day. We're falling a bit lower. I'm going to take another long. Okay. And we've fallen lower again, so I can take another long. So I'm just buying as the market falls. Okay. Because we're accumulating good deals, essentially. We don't want to be selling into the lows like the rest of, the folks losing money do. Okay, that's very typical of newbie traders. They short right down high sizes at the lows, and it gets them absolutely crunched. Okay, but if you've got a light size, you don't really experience the same issue. So come down, I'll kill this off for $388 or so, and we're falling again. Now the push to the lows is strong here, so I'm not going to add until now. I'll add a 0.33, and ideally, if we get a push up, I'll look to the short side and kill off that light long. So I've got gains there for $743, and I don't really need to add anything just yet. So I could take a light short going forward in here, and any trickle back to the lows, I can kill that $470. And I could take a light long again, and any push up I can kill again. So I'm just doing this on the weekly because it's going to give us the widest range of the market in a short period of time. That's the benefit of the sim, really. So I'll kill that one off, and I'm just going to add another one. Now, these are very light sizes just to reflect the risk in the market, which obviously at this point is apparent because the moves are very limited. The only disadvantage of the sim is those fast moves you can miss. Take that off for 5. So I can add another short here of 0.33. And then if we push higher again, I'll add another one. So I spread about one standard over those, over that distance. Okay. And now it's going to give me the opportunity to add again. So at this point, I'm going to add something there. But now it's going to be my last add. All right. So that was a fairly bigger size, but I'm not going to add another short. The only thing I'm going to do after this is trade to the long side. So I can take that for $600. Balance still in positive territory. Take a 0.2 just to hedge some of that, so 1/5 of the exposure. Okay, and on any push up, I can kill, but I'm going to add again on the push down. Okay, and I'll take $187 there. Gains, and on a push lower, I can kill again. Okay, so I can kill that one off. Excellent. Add again, 0.2. Kill it off for 260. Add a short lightly. And on a push down, I could take some. So I'll take that off again. Now I'll step the long size up a little bit more. 0.3. And I'll kill that. So picking up a lot of gains here. And I'll add a 0.3 short. We're just playing through the weeks now. And on a further fall, I can kill that nicely for gains. And I could probably, if I want to, wipe that one out. And I think I will. Okay, so I've washed that away with the profits taken, i.e. the hedge gains I've taken overall. And on a push down, I can actually just kill that for $430. And now I'm in a decent position because if we pop, I've got the opportunity to exit. And then after that, I'm only really left with one long, and it's only a small one at the top. So a good push down to 105.56, and I'll add a further long. At this point, I'm just going to kill that one off, and I'm just going to mitigate some of that long side exposure with a short. Okay. So now the hedge is effectively the long. And I will kill that off, and I'll add 0.3 long. And we're not getting a lot there, so we can see where we end up by taking another one lower. So I can kill that one, okay, and I'll just take another short. And we're still well in positive equity, no problem. Okay, which is good. And any move higher up, I can add again. Just need a bit of movement coming along. Okay, so a nice 330 there. and I can just take another long there. And you can see a bit of an arrangement forming, which will allow us to take a bit more again, possibly. And on a much further push to the downside, I will take a further long. So it would require probably a more vigorous push. I'll take that and I'll short. And you can see it doesn't really matter what way markets go. You know, we're in gains all the time. So I'll take another 0.3 just to put the size up a bit. Okay, and any whack lower, I'll take it. And anything else, I'll hedge long. So I can see a little bit of momentum building to the upside. So I'm going to hedge long. I've now got 0.4 open long, whilst the 0.6 loses money. And that will swap ultimately if we push lower. So we'll play it forward, see where we end up, either short or long in terms of closing gains. You can see there's hardly any movement throughout the weeks now. So you could have been trading intraday, really, to be honest, with lighter sizes. I'll just add another 0.2 long. And I'll add another 0.2 long. And now we're getting this real range. Okay, you can see how I've drawn the longs. You've got a range on both sides. I'll add another 0.2. And on a much larger retracement, we can probably kill everything off because we banked enough gains to be settled. So I don't need to hedge because I'm still in positive equity overall. But I'm just waiting more or less for a larger push, at least back to these key MAs. And I would expect on this market, particularly, that to occur at some point. You know, typically you'll get larger retracements, which is mostly why this works so well. So I'll kill those off and I'll short. Okay, and if we just keep pushing up, I'll kill the longs, and then I can exit the cycle for decent gains overall on all trades taken, which is our aim. So I'm going to kill that off, and again, I'm going to look to the long side. And on a larger push, we can be out. So 266 there. Just take a small hedge there, 0.2. Really looking for a big push to the upside. Although it doesn't matter, particularly if we don't get it. Because I'm going to be in gains overall anyway. Okay, so that will do. I'll take that one off. And I can just close everything out. I could keep hedging, but ultimately I'll still be in gains. So that's another good demo. Don't forget, watch them all across this channel because every single video we're in net gains. Doesn't matter what the market does. You can see solid 84% plus win rate every time and decent gains to go with it. Of course, again, the drawdown was fairly low throughout that whole cycle. The market did swing a decent amount as well at times, but we're never really in danger so long as we trade correctly. Thanks for watching. Don't forget to like, comment, share, subscribe. See you in the next one.